All right, so buckle up, everybody, because today we're going to deep into some high-stakes global finance and national security stuff with this new America First investment policy. Ever wonder how, like, a document straight from the White House could actually, like, directly hit your wallet or your job or even, like, the kind of tech you're going to be using in a couple of years? Well, this memo is laying down some pretty serious ground rules, and frankly, it could really shake things up big time.
Yeah, no, it's definitely a bold move. This isn't just some, tweaking a few numbers here and there. This policy is trying to like fundamentally reshape how the U.S. interacts with the whole global investment scene, especially when it comes to China.
Right, and it's all laid out in this memo that just dropped yesterday, February 21st, 2025. We're talking about attracting investment from allies while kind of pumping the brakes on investment from, well, adversaries, particularly China. I mean, it even mentions like terminating the 1984 U.S.-China Income Tax Convention, which has been around for like over 40 years. That's massive.
It is. It is. To really grasp the weight of this, you gotta understand the backdrop. For decades there's been this assumption that open markets and free trade like benefit everyone, right? But now with all these concerns about China's, growing economic and military power, things are shifting. The US is basically saying, "Hold on, we need to prioritize our own national security, our own economic competitiveness."
And the memo, it doesn't beat around the bush, that's for sure. It specifically calls out China's military civil fusion strategy as a major concern. To be honest, before diving into all this, I wasn't really up on that whole concept.
Right. It's basically a policy where China kind of, blurs the lines between civilian and military research and development. So imagine like a Chinese tech company, right, developing, let's say, facial recognition software for like a social media app or something. But that same tech is also being used by the government for surveillance and for military purposes.
Whoa, okay, now that you put it like that, I'm starting to see why that would raise some eyebrows.
Exactly, exactly. The worry is that U.S. investments could, inadvertently be funding technologies that could potentially be used against us, which is a direct threat to national security.
So this isn't just about economic competition anymore. It's about protecting ourselves from potential threats, even if those threats are coming from technologies that we might be like indirectly funding. That's got to be a tricky line to walk.
It is, and that's what makes this whole policy so fascinating. It's forcing us to rethink how we engage with the global economy in a world where technology is moving at like warp speed, and the lines between economic competition and national security are getting blurrier and blurrier.
Okay, so they're restricting investment from China, but the memo also goes into detail about the specific areas they want to restrict, right? Like it mentions things like semiconductors, AI, quantum computing, biotech, all the stuff that sounds like it's straight out of like a sci-fi movie.
Yeah, yeah, no, it's a pretty strategic list actually. These are all fields with huge potential, not just for economic growth, but for military applications too. Semiconductors, well, they're the brains of all our modern electronics, right? AI is changing like how we fight wars. Quantum computing that could crack encryption codes, and biotech has implications for everything. I mean, from bioweapons to gene editing.
So by restricting investments in these specific areas, the U.S. is trying to like prevent China from gaining this technological edge that could threaten our security. It's almost like a technological arms race.
It is a bit like that, yeah. And it's not just about preventing China from getting ahead. The U.S. also wants to boost its own development in these critical technologies, right? So by attracting investment from allies and focusing resources on these sectors, the U.S. hopes to maintain its global leadership.
Okay, this is making a lot of sense, but I can't help but wonder how this is all going to play out, like in the real world. Like what does this actually mean for everyday people? Will it just affect like big corporations, or could it also hit a little closer to home?
That's the million-dollar question, and it's definitely something we're going to explore in more detail as we dive deeper into this whole policy. But just to give you a taste, imagine if the cost of your smartphone suddenly like skyrockets because the U.S. can't import cheap semiconductors from China anymore, or what if your retirement fund takes a hit because a Chinese company it invested in suddenly gets blacklisted.
Wow. Okay. Now I'm really starting to see how this could have ripple effects. They go way beyond the boardrooms of Wall Street.
Exactly, exactly. And that's why it's so important to unpack this whole policy and understand its potential consequences, both intended and unintended. And it's not just about the economic impact, right? You also got to consider the potential like political and social ramifications, like what happens when you start explicitly targeting investments from a specific country. Could this lead to like increased tensions, or even escalate into some kind of economic Cold War?
That's a pretty daunting thought. I mean, we've seen how interconnected the global economy is. If things start to like fracture along these lines, it's hard to imagine it not having some serious consequences.
Absolutely, absolutely, and that's why this policy has generated so much like discussion and debate, right? Some folks they argue it's a necessary step to protect U.S. interests in a world where the rules of the game are changing. Others they worry it's a dangerous move that could ultimately backfire and harm the global economy as a whole.
It's definitely a complex issue. No easy answers here, but let's try to break down some of the potential impacts, right? Starting with the everyday consumer. You mentioned earlier how this could affect like the prices of things like smartphones. Can you elaborate on that a bit more?
Sure, sure. Take semiconductors, for example. They're essential components in pretty much all our electronics these days, right? From phones and laptops to cars and refrigerators. China is a major player in the semiconductor industry, and restricting access to those Chinese-made chips. Well, that could drive up costs for U.S. manufacturers, which would likely translate into higher prices for consumers.
So it's not just about the availability of products, but also affordability. It's interesting because on the one hand, this policy is being like framed as a way to protect American jobs and industries, but on the other hand, it could end up hurting consumers by making everyday goods more expensive.
That's the paradox, isn't it? And it's a dilemma policymakers have to grapple with. How do you strike that balance, right, between protecting domestic interests and maintaining a competitive global economy that actually benefits consumers.
And what about the impact on American businesses? It seems like this policy could create both winners and losers.
Definitely, definitely. For companies that rely on Chinese investment or supply chains, this policy could be disruptive, forcing them to rethink their strategies and potentially incur higher costs. But for companies that operate in sectors where China is seen as a competitor, well, this could create opportunities for growth and expansion.
So it's a mixed bag. Some businesses will likely thrive under this new environment, while others may struggle to adapt. It'll be interesting to see how different industries respond and adjust their strategies in the long term.
Absolutely, absolutely, and it's not just about established companies either. This policy could also have implications for startups and entrepreneurs. Access to capital is crucial for startups, right? And restricting investment from certain sources, well, that could make it harder for them to get off the ground.
That's an important point. Startups are often the drivers of innovation and economic growth. If this policy inadvertently stifles entrepreneurship, it could have long-term consequences for the U.S. economy.
Precisely, precisely. And that's why it's essential to consider all the potential ripple effects of this policy, not just the immediate impacts. It's a complex web of interconnected factors, and understanding how they all play together. Well, that's key to navigating this new landscape.
Okay, so we've talked about consumers and businesses, but what about the average investor? How might this policy impact their portfolios and financial decisions?
Well, for starters, it's going to create a lot more uncertainty in the market. The memo explicitly states that the administration is going to scrutinize Chinese companies that are listed on U.S. stock exchanges, which could spook investors and lead to volatility.
So we could see a sell-off of Chinese stocks. That would definitely have an impact on investors who hold those stocks in their portfolios.
It's certainly a possibility, and it's not just individual investors who need to be aware of these changes. pension funds, university endowments, and other institutional investors, they also have significant exposure to Chinese assets.
So this policy could potentially affect everyone who has money invested in the market, either direction or indirectly. It seems like it's going to be more important than ever for investors to do their due diligence and understand the risks involved.
Absolutely, absolutely, and it's not just about avoiding investments in Chinese companies. This policy could also have implications for broader investment strategies. For example, if the U.S. starts favoring investments from allies, right? Well, it could lead to a shift in capital flows and potentially create new opportunities in different regions of the world.
That's a good point. This policy could actually lead to a diversification of investment portfolios away from a heavy reliance on China and towards other markets that align with U.S. interests.
Exactly, exactly. And that's just one example of how this policy could have far-reaching consequences, not just for the US economy, but for the global investment landscape as a whole.
All right, so we've covered a lot of ground here. We've talked about the potential impact on consumers, businesses, and investors. But there's another crucial aspect of this policy that we haven't really touched on yet. The termination of the 1984 U.S.-China Income Tax Convention.
Ah, yes, yes, that's a big one. And it has the potential to significantly alter the financial relationship between the two countries.
So, for those of us who might not be totally familiar with this treaty, could you give us a quick rundown of what it is and why it matters so much?
Sure, sure. In simple terms, it's basically an agreement to prevent double taxation for businesses and individuals who are operating in both the U.S. and China. It sets out rules for how income earned in one country is taxed in the other.
So it's basically meant to like simplify things and make cross-border business a bit smoother.
Precisely, precisely. And for decades, it's been a cornerstone of the economic relationship between the two countries. But now, with the U.S. aiming to, kind of decouple strategically from China, terminating this treaty, it sends a very, very strong signal.
I can imagine. What are some of the potential consequences of terminating this tax treaty? You mentioned earlier that it could lead to increased taxes.
That's right. That's right. Without the treaty in place, businesses and individuals could face higher tax burdens on income earned in both countries. This could make it less attractive for U.S. companies to operate in China, and vice versa.
So it could discourage investment and trade between the two countries, which seemed to be in line with the broader goal of this whole policy, right?
Exactly, exactly. But it's not just about discouraging investment from China. Terminating the treaty could also have implications for U.S. companies that are operating in China. They could face higher tax liabilities, which could impact their profitability and competitiveness.
It's a bit of a double-edged sword then. It hurts Chinese investment in the U.S., but it could also hurt U.S. businesses that are operating in China.
It's a complex situation, and it's still too early to say for sure how things will shake out. But it's definitely a significant development that investors and businesses need to be aware of.
Absolutely, absolutely. It's clear that this America First investment policy is about much more than just restricting investment from China. It's about like fundamentally reshaping the global investment landscape and prioritizing U.S. interests, even if that means potentially disrupting established norms and relationships.
It's a bold move, and it remains to be seen what the long-term consequences will be. Will it succeed in protecting U.S. interests and fostering innovation, or will it backfire and lead to economic instability and geopolitical tensions?
Those are some pretty weighty questions, and unfortunately, we don't have a crystal ball to tell us the answers. But what we can do is stay informed, pay attention to how this policy unfolds, and try to understand the potential ripple effects, both domestically and globally.
I couldn't agree more. This is a policy that has the potential to impact all of us, whether we're investors, business owners, or simply consumers trying to navigate an increasingly complex world.
So to our listeners, as you watch this policy play out in the headlines, just remember that your investment decisions, your career choices, even your everyday purchases are all connected to these larger global shifts.
And perhaps the most crucial takeaway is this: in a world where economic competition is increasingly intertwined with national security, staying informed and understanding the forces at play is more important than ever.
That's a great point to end on. Thanks for helping us unpack this complex and frankly fascinating uh, policy.
The pleasure was all mine.
Until next time, stay curious and keep exploring.